now we can start the panel. Let me first introduce Shawn Lim, who is also a CFTP, Chartered FinTech Professional from Artichoke Capital. He's from Artichoke Capital, which is a Web3 fund. And I believe that last year he has actually been looking into about 1,000 Web3 projects. And with that kind of wealth of experience and traveling around the world half a year, I think he has a lot of experience to share with us. So today we are very glad to have him here. So could we put our hands together to welcome Mr. Shawn Lim? Okay, so I think the format is this, that it's going to be very casual. This is something that we're going to have a conversation. It's more like a fireside chat than a panel, that we can actually ask questions with each other. But I would like to start off by wanting you to introduce yourself in more details. So maybe I'll ask Dr. Ayo to introduce himself, although all of you know him. Tell us more about yourself and things that we don't know about you.
Cool. Yeah. So Ayo, coming all the way from Maryland. What you may not know about me is I come from a very large family, and I'm the last of 6. And so, but it's a very tight-knit family. We do a lot of things together. And that, and the fact that I'm the last of 6 actually shaped a lot of what I ended up deciding to base my career on. So I have older brothers and a few sisters that, just a spectrum of expertise. And so I gravitated towards computer science because my brother pulled me aside when I was 9 years old and gave me a laptop and a Java book and was like, go learn this. And I was just playing games at the time. And so that was sort of my pull into technology. I started, writing code then, and I haven't stopped since then. And so I think back to, things in my early childhood that basically shaped my view of technology and the choices I decided to make with my career. So to kind of bring it home, I did computer science. I ended up spending a lot of time, with software engineering, went to Carnegie Mellon, and then met some folks at my first job at Johns Hopkins that led me to become more interested in cybersecurity. And that led me to Hopkins for the PhD program, and that's where I got into cryptography. And I loved it, just seeing how advanced cryptography is so transformational in terms of not only cybersecurity, but information security, for us to be able to encrypt data, secure our most sensitive information with cutting-edge cryptography and making it future-proof against hackers that want to do us harm. And not only did I go down this rabbit hole of wanting to learn more about cryptography, but I also went down the rabbit hole of startups and wanting to take research ideas and turn them into products that help people. And this is all what led to Bolt Labs and wanting to sort of be a mission-driven company that took advantage of cutting-edge cryptography to help people. And so I'll stop there.
Because I remember that the person who introduced me is Zuko Wilcox.
Right.
Because you're all from the Zcash community. Mm-hmm. So he was asking me, would you like to invest in this company? Mm-hmm. And I was looking at your company and say, yes, why not? We have a PhD in cryptography, looking into the area as part of the Zcash community, which I thought was very interesting. And I suppose you work with a lot of other cryptographers in the community as well, which those people who are not familiar with the Zcash community, they are the one that actually started off with a zero-knowledge proof for privacy coins. And we'll talk more about that later. But welcome. Are you all the way from Maryland to come here for 1.5 days? We've been waiting for you for 2 years, and finally we get to see you.
Yeah. I'm glad. Glad I made the trip.
Yeah. To Shawn, can you explain a lot more about Artichoke? What you do? What's your previous life? How do you get into this Web3? What interests you? Let us know.
Yeah, thanks for having me here, guys. My name is Shawn. I run Artichoke Capital. We're a very early stage focused, Web3 focused venture capital firm. I'm Singaporean, but I'm a lawyer by training. I was out of the country for something like 9 years. Was in London, was in New York, went to law school, practiced as a lawyer for several years, and then eventually wanted to learn how to run businesses, and so figured that just doing deals for other people would only get me partway there. And so I took up a role at a private equity firm that hired me to help run a consumer business. They owned Burger King, and so I ended up going from being a lawyer to like selling burgers. And then my Chinese was just good enough to convince the Americans that I could run the Chinese business. So I ended up moving to Shanghai to run the China business for Burger King, which was a really great experience. And in part, to me, till this day, I think it still informs my view of what people get sort of tripped up and confused around what Web3 is, and what's the use case and what's the point. One version of it is just sort of like just more digital integration into sort of everyday life for most people. And in China, you have a very sort of centralized version of that, where you have a couple of big companies as the sort of the money layer, if you will, for the economy. And then through that, you see sort of like deep integration between sort of how digital payments at the social peer-to-peer layer, or like merchant services, and how that really sort of is a big difference versus like a sort of more analog or fragmented digital economy. So anyway, for me, running that business and going through sort of the digitization process in China through the sort of the late 2010s or golden age of Chinese consumer tech, I think, was really fun and good experience for me. Been toying around in the crypto ecosystem since learning about it, and investing on the personal side since about 2014. And then again in 2017, always never felt ready. But increasingly, I think technology takes time to be incubated. It takes time to sort of get to maturity and for infrastructure to exist, like MPC. I think that solves some of the historical UX challenges we've had in the industry. So anyway, we started Artichoke in late 21, and really focused on investing in companies that are bringing this new technology to the world. It's interesting, I think, to be an investor. I think there's a lot of infrastructure that's better, still improving, but it's substantially better than 5-6 years ago. And so people are actually able to build useful applications that are beginning to be able to be used by consumers. And at the same time, we have a very sort of rapidly changing regulatory environment, which is where sort of the legal insight, I think, can be interesting to a lot of our portfolio companies, right? If you're running a startup, you typically don't start by thinking about all the different legal angles and regulatory challenges. So but very fun journey, and very exciting, very high energy industry, and very happy to be part of it.
Very interesting background, from a lawyer doing deals in New York to food security fund management, and food fund management, to running operation in China for Burger King, to become a Web3 fund manager. I think it's extremely interesting. And being a key advisor for Artichoke Capital, I would say that it's very enjoyable, always working with Shawn, which is also backed by one of the sovereign wealth fund. Okay, I think we started from very basic, because not many people have this background, and quite a lot of them that today are here are not really very conversant with the Web3 world. So maybe I can ask both of you, how do you explain to someone what is multi-party computing? We talk about MPC, but what really is multi-party computing that everyone here can understand? Maybe we'll start with Ayo.
Yeah, so very much a loaded term, and MPC definitely has a lot of applications but the common denominator is just this idea that you want to compute any computation that involves private inputs from a group of people, and everybody in that group wants to keep their private information to themselves. So if you think about like data analytics, right? You submit your data to the cloud. If you encrypt it, there's an MPC protocol that would allow wherever you upload it to allow them to run computations on your data while it's encrypted, and they don't learn anything about your private inputs or your sensitive data. So there's some really, really cool applications for MPC. Is just it looks different for those different applications, but the common denominator is wanting to keep private information private while executing computation that benefits a group of people. And for the custody space, digital assets have been notorious for a lack of security for a long time. Obviously, I'm not saying that it hasn't been secure. It's just that it's been difficult to secure in ways that is progressive. And by progressive, I mean support this new version of the internet where data does not exist in one location only, right? It's going to move, and MPC is a way to secure digital assets such that you can increase the bar for hackers to compromise that asset and steal it from you. And with Web3, once a private key, which is associated with a digital asset, is gone, then there's no recourse. Like there's no blockchain recovery support for stolen assets. There are things like chain analysis that help you try to get some of your, but that is a reactive solution. It's not a preventive solution. MPC is a preventive solution that secures assets from the beginning in a way that allows you to be flexible in the different ways you can use that digital asset.
Shawn, you want to add on if any of those comments there?
Yeah, I think within, I guess, from the, I'm not a cryptographer, right? But within the digital assets industry, from the perspective of a user, I think there's different. Everyone's familiar with seed phrases, and you have this sort of single point of failure, and then you saw this evolution, right? Like people then started building multi-signature sort of smart contract wallets for so that you can. If one sort of key is compromised, you don't lose access to the entire treasury. And then, that was a nice solution for a while, but all the actions were on chain. And so when we started having more and more blockchains, and you have sort of cross-chain challenges, and then, having a multi-signature wallet at the chain level on many different chains started to become like a big sort of administrative hassle. And the more keys you have, the more likely you are to lose one of them. And so MPC I see as like a very elegant solution to sort of this challenge, right? Where you can have not a distribution of responsibility at the chain level, but at the signature level, which is one level above and more generalizable.
So that's very interesting. So maybe that's the basic philosophy, right? As a lot of cypherpunk in the 1990s, that once you are online, you are susceptible to data theft. So data protection and privacy protection is the key when you go online. That's something that you cannot compromise when you have the digital economy. So even though you have a centralized server, because being centralized is efficient. You can make decision immediately, and just one party that does the decision making. So in order to increase the cost of hacking, you actually distribute it to many nodes, many computers, or many just not single server clients, but many servers, so that if you want to hack it, your cost is increased. So actually it's a very inefficient system. So a lot of people thinking that they can do blockchain and make it very efficient, but they don't really understand the Web3 philosophy is to make it inefficient.
Right.
I think that's the basic thing that everyone said was fail, It is so inefficient, but that's precisely the point, that it has to be inefficient so that the cost of hacking is high. That's the purpose. We want to make it inefficient. And I think that message hasn't got through yet. I keep seeing enterprise doing blockchain, hoping they'll be efficient. But they forget that the main purpose is actually to protect ourselves. And that's the key thing. So my question is that Shawn was talking about this. I'll come back to you, Shawn. You were talking about multi-signature system, right? What is the difference between multi-signature? You're talking about one layer above. Can you explain more in detail what is multi-signature? What has it got to do with multi-party computing? Because now we have no one in charge, maybe, or some only partially in charge. Right. So the key become very important. What if I forget my private key? Is it all gone? What's multi-signature system that we're talking about?
Yeah, maybe I can use the example of like maybe the three of us here, right? So say, the three of us decide that we want to like start some DAO, right? Something on chain. And we say, okay, well, let's do it on Ethereum, right? So if we just do it on Ethereum, we can set up, like a Gnosis safe multi-signature smart contract wallet, right? So at the smart contract level, it will say, okay, he has one key, I have one key, you have one key, and you need 2 of 3 to sign. And so when we want to make a transaction, we can use the, like the smart contract level application to execute this transaction, right? As long as 2 of us are willing to sign, we can execute any transaction on chain. So that's fine, right? It works for this one case. But, say we, like business is great, like the community is growing, we want to expand to other blockchains. We want to go on, I don't know, Solana or some other, like 5 other blockchains. To do that administratively, operationally, we would then have to set up, we have to go find a different multi-signature sort of application provider on each blockchain. And then we would sort of run through the same process. We would set up another multi-signature smart contract, and then we would have to figure out the same, you have to generate a new key, right. I would have to generate a new key, and after 5 chains, we now have like 15 keys, right? Floating around, and we have to then sort of coordinate across many different chains. At the signature level, as long as sort of the type of signature that is generated to sign a transaction is compatible, we could use a multi-party computation-based signature scheme so that we still have 3 types of keys without needing to get to 15 or as we go sort of into more and more chains. And so it simplifies operations, I think, for businesses that are trying to do things on chain. And I think there are additional flexibility and sort of programmability options that you have when you start having using sort of multi-party computation-based systems as opposed to multi-signature systems. Yeah.
Yeah, that's very interesting. So you have multi-party computation. Right. Now you have your multi-signature for one blockchain, but it's not that I just own Bitcoin. I will have Ether, I will have Solana, I will have so many different. It's just a nightmare having this all together. So how do you whenever you have innovation, there will be problems. A lot of people think that, this is a problem that cannot be solved, but other people will look at it as a problem, as a business opportunity, huge business opportunity. Right. So what Boat Labs is trying to do to capitalize on this, could you let us know what business model they are creating to take advantage of this really complicated and yet is a must-have?
Right. Yeah, and then the cool thing with MPC is the fact that it's blockchain agnostic. And so, as you're saying, like you can generate one private key, apply MPC to it, but then be able to take that one key and with some additional cryptographic techniques, be able to instantiate it on multiple blockchains, right? And still have separation in terms of the key usage where you've applied MPC, which I think is really cool. And so this is where like key derivation and multi-signature can be solved with MPC, right? And so it reduces the inefficiencies of having to have multiple private keys for multiple chains.
Is that your business model? How?
So that's one. I'm just more or less pointing out just the cool things that we're able to take advantage of to be able to like help companies that want to build wallets on top of it to be able to reduce the cost of deploying on such, deploying with MPC, but still able to do everything that you're used to doing with a signature, a single signature wallet. And so our business model really is on the infrastructure side as a service to help people be able to build their own wallet on top of an MPC system without having to reinvent the wheel. They get rid of the seed phrases, which is good. That's not needed for our system, but they still, get to generate keys in the same way. From an API perspective, they still get to sign transactions the same way. They get to support all the Web3, protocols that they are accustomed to. They can just plug and play. And so our business model is similar to anyone that is offering, software as a service, and we're just charging based on, a subscription, monthly and annual, based on their usage, number of users, and transaction volume. So on the surface, it looks just like a regular software as a service type of business, but underneath the hood, the value prop is much bigger, which is just this evolution of, helping people integrate with MPC without having to worry about the heavy lifting.
Right.
Yeah.
So you provide the infrastructure so that now, if I have I'm a custodian, I have a certain requirement, right? So going forward, everything will be tokenized. This is what China is doing. That's what Singapore is trying to do. Everybody is trying to tokenize not only paintings, not only digital art, but we are trying to tokenize so-called RWA, real world assets. Everything that is in the real world, we're going to tokenize, whether it's a cow, whether it's a fish, whether it's a food security that we are going to tokenize all of them. So when it comes to financial institutions, it is no more a case that you're going to, I'm going to have a vault and then you put all your gold in there. Somebody will be warehouse business doing that. The banks and the financial institutions will only be custodizing the private keys.
Right.
The MPC key. So the whole financial industry is going to change, right? So how does that change the trust? And how does this MPC, this private key that is segregated, and then you have a system on top, changing the trust system in the whole world where everything is digitized, everything is on distributed ledger, blockchain, or even if they're 2.5 with some cloud technology. Maybe I start with Shawn. How does this change the trust system?
Yeah, I think so. The Web3 as a concept is interesting, and in my mind, it's inevitable, right? So like over the past, 30, 50 years, we've digitized more and more things, right? We started with information. If you think of like how we've digitized information, like the early version is like you scan something, right? You convert something from paper into like a PDF form. And then people then started doing like digitizing information, but instead of a PDF form, let's do databases, right? So it's more queryable, the data is more usable, and you can search it. And then we started, in the Web 2 era, right? We started digitizing social relationships, peer-to-peer relationships, sharing, and the social graph. And step 3 is assets, right? Like we've digitized some of the intangible relationships in society and information, and the next thing is to start digitizing things, right? Intangible things, tangible things. And so, you think of the convergence of technology, like I just want to say like the trend is clear. I don't think we're going to go to a more analog world. It's always more digital. And when you have more digital things, you can then do more automation, right? Which is, the trend of AI and all this stuff. And so if you think about like that migration from sort of digital and even digital, like, the analog, again, PDF form to database is like both are digital, but different levels of digital. As we move towards the most digital version of everything, the next question is how do you then secure these digital things? And the traditional model has been you're a big sort of institution, financial institution, you try to protect your data. You try to protect your data in your own little system, and you can invest a lot of money in that system, but you end up having like a very similar problem, a complicated version of the the single point of failure problem that seed phrases have, which is like if one person compromises your system, your entire system is compromised, and which is why over the past kind of decade, 2 decades, you've seen hacks and leaks of people's private information, healthcare information, credit information, whatever. And then you think about the cost of fraud in financial services and how big a part of the cost model that is. And so like, what is the better solution? You know, like if you migrate to like digital assets, and people look at digital assets, you still have, you know, you've distributed trust at the blockchain level, but at the wallet level, unless you are using another distributed system, you still have this concentrated single point of failure risk. And so the beauty of you know, MPC technologies is that, you know, we now have decentralized ledgers, but now you can also then decentralize the wallet layer, the account layer, the access layer, right? And by having, and then there's a lot of things you can do on top of that, like programmability, right? So I'll pause there.
Ayo, you have anything to add on that?
Right, that was pretty comprehensive.
Yeah, so I think what the discussion here is that we started off that is very important. Once you go online, data and privacy protection cannot be compromised. And therefore, we want to make it inefficient. That is something that we need to understand why we are doing Web3. The second most important thing, which I just discussed with you, that it seems that we need to lower the trusted third-party cost, right? We talk to all the bankers and financial institutions. They spend all their time trying to guard against hacking, almost on a daily basis. All their energy is spent on that. There become a tipping point that they say, okay, there's no more centralized system. We're going to move to multi-party computing system or other distributed system. But if you put everything onto a blockchain, then everybody has a private key. Then you have a custody who actually custodize this private key. Then it's still centralized. So in other words, you decentralize the architecture, but when it comes to custodizing the private key, again, it's centralized. So what Shawn is saying is that at that level, we need to decentralize again, right? And the whole idea of decentralization is that we have to reduce the cost, the time cost, the money cost, and so on. But we are continuously at each level that we increase the cost of hacking. And that is the purpose of Web3, right? Because the basic premise is that data and privacy protection cannot be compromised. Okay, and that gives to the fact that we have to lower the cost of the trusted third party. And the best is not to have a trusted third party. While it is not possible, we will try to make it not Web3, but Web 2.1, 2.2, 2.3. That is our mission in Web3 to try to do that. So my question to you is that we can continue to do this, but can you give us even more specific use case when it comes to digital assets? Because we are talking about digital assets, how the trust has changed. Would you like to give me some very good examples about use cases of this, using this MPC or, Ayo, can we start with you?
So do you want the average
Yeah, you can give, wherever you think.
Institutional use case. Okay, so there's definitely a spectrum of use cases. And my thought process is always...
More importantly, why should financial institutions be interested in the kind of things that you're doing, and what sort of use cases?
So when we think about accountability and who actually owns an asset and what it means to distribute trust and the responsibility of an asset, you realize that whoever the asset owner is kind of bears the responsibility of whatever happened, whether it's stolen or if there's a compromise in the system. They usually bear the cost of that. When you have a self-custody wallet, it's the user that bears the responsibility of that. If you have a fully custodial wallet, it's the service provider that bears that responsibility. With MPC, you have something in the middle where you can share that cost, right? But there's still this problem that, like, how do you equally distribute, the liability of a compromise? And I kind of boil it down to who is the asset owner and what controls can they set around the movement of value or of the transaction signing around that asset. that's, in my mind, that's where it boils down to, because based on the specific use case. So for example, if I willingly approve a transaction that is part of a DeFi protocol, and let's say that DeFi protocol happens to be, has some vulnerabilities that end up leaving me losing the asset, or I'm not a DeFi expert. I'm just giving you a very high-level scenario that may or may not be realistic. But let's just say that, let's go with that scenario where I willingly approve a transaction and it's part of a protocol in which I lose, the funds. In that instance, I, as the person that approved that transaction, single-handedly bear the responsibility. But if it's something that involves another party and we both agree to sign this transaction because of whatever the use case or application is, then we should split it 50-50. And so this is more on the Web 2 side, some of the scenarios I've seen where it's led to a lawsuit. So a lady that came to me asking for help understanding who should be responsible for theft of her Bitcoin and Ethereum. She had basically set up an account with IRA Financial. Do you guys remember a couple of years, I think it was this last year, this was a hack of Gemini and IRA Financial in which assets were stolen. The lady that came to me was part of that incident. So she had an account with IRA Financial. IRA Financial had an account built their system on top of Gemini. Gemini is a regulated exchange. They have security, security mechanisms to control they follow best practice, is all I'm trying to say. But there was still a compromise that happened because of a confluence of events, and assets were stolen, and this lady ended up bearing the cost of it. And so she felt it was unfair because she didn't know that by signing an agreement with IRA Financial, she was also signing up with an agreement with Gemini. And so Gemini didn't want to take responsibility, even though they were the ones that were hacked. IRA Financial didn't want to take the responsibility because they thought they followed the best practices according to what Gemini was making available. And so it ended up going to litigation. It's still in litigation, but it's going through a process of early settlement discussions based on this problem of, okay, who is actually responsible, but they're looking at the technology that Gemini's put in place and IRA Financial's usage of that infrastructure to determine who actually is liable. But so I don't know if I answered your question, but
I think it's very
very hard problem because of the technology part and how people are using it to determine who actually is responsible, even when you know who the asset owner is.
Right. So the thing that in my mind is that you could have somebody who prepare form to say, can we ask my boss to approve, and the boss one will approve, and then after the boss one approve, they can go to boss two approve, and then go to ultimate boss, and the final person will just approve it. You have to trust everybody along a single line, but it's centralized. But in the case of horizontal, in the sense that three of us got to know what we are doing, and two out of three of us can approve it. So there's something that I'm just the easiest to explain is that because now it's being used as technology, so it's a lot faster and it's more transparent to immediately know how this is being done, and because I think it is efficient and inefficient, because layer by layer approval can be very inefficient, yet fairly risky in the virtual world. But if it's a simultaneous time that we all can form a consensus and majority approved, then it seems that it is more efficient and yet inefficient in another way. Shawn, do you have any add-on to that?
Yeah, I think actually, if you think about MPC and what you can do, it's actually pretty interesting. So like there's different ways you can use this ability to distribute sort of access control, right? You can say that, within your organization, you are going to split it across different geographies. I don't know. So you're less likely to get compromised. One data center is compromised, but not the other. And so if you need multiple signatures across geographies, you are more likely to have a robust sort of, internal policy within your organization, and less likely to be compromised because, you separate the servers. But you also have a different route that you could take, which is you can distribute that access control outside your organization. So, in the first example, I run a custodian of digital assets. I can then set up a policy where, Ayo's in the US and I'm in Singapore, and we both have to sign for something to happen. But we are both part of the same organization. We probably share similar IT systems, even if the data centers are separate. So better than single point of failure, but still some level of centralization risk. The alternative is, we can distribute it with a third company, right? So maybe internally we both have to sign, and that's the organization's signature. But maybe we have a friend that runs a third-party security company, and they have the other key. And so for someone to compromise our transaction, they would have to compromise both us internally, and we invested a lot in security, but also another person with a different system that's also invested deeply in security. And through that, I think this is sort of what you guys were hinting at, which is you distribute trust and responsibility, and as a result, also liability, right? Like it becomes a much more robust system, more secure, more robust, and sort of much harder to compromise because there's more things to compromise before you can actually access the final asset.
Yeah, but that comes to a very interesting question here. How do MPC infrastructure vendors, right, provide the assurance that the risks aren't centralized at the software provider level, which I think is a very important question. Do you have any thoughts about that?
So this is the custodian, right, of...
Yeah, you have the infrastructure side. Yeah, you are both labs.
Yeah.
How do you ensure that the software, the risk is not at the software?
Right. So there are definitely a couple of things that we're doing, and I think other companies in the space are doing as well, which is like, SOC compliance, which is just looking at the process that's in place to build the software, and the individuals and their expertise in the development of the software, and the people involved in the deployment of the infrastructure of that software, and the security review of the design that the infrastructure is building on. So there are like multiple things that ended up getting reviewed as part of before customers actually are able to deploy on it. And so fortunately, like a lot of this is getting standardized, and so we're not coming up with a new playbook of how to do it. We're learning from some of the companies that have already done it successfully. And so, but that's what it looks like. I mean,
it seems like code editing will be very important because we can't have a case that we see recently, right? You just audited the code and then tomorrow it get hacked. That will be a big scandal. But of course, when you try to audit the code, which part of the code you're auditing is another question. It's very deep in there. It's more complicated than sometimes I see in LinkedIn. People will say, "Oh, this company just audited the code and tomorrow they get hacked." It's a real joke. But they don't understand that sometimes they only allow you to audit part of the code, right? And use that for marketing. And then some people just come and link in. You see, this is a joke, Web3. To me, it's like, do you really understand how complicated is at the auditing level? Yeah, Shawn, to that question about ensuring risk is not at the software level, you have anything to add?
Yeah, I guess it's interesting, right? So like, so we've now, based on what we've discussed, like MPC sounds like the holy grail of everything, right? Like it works for everything, it's very secure. I guess, so I guess that's the question, right? Like, now that we've sort of started distributing again, so like where is the centralization risk in sort of the model that we've described is at the software level, right? Like what is the MPC sort of software you're using? And I think what Ayo was talking about was sort of SOC 2 compliance, code audits at the software sort of infrastructure backend level. I think the other part of this is probably sort of how like deciding what open source algorithm you use on the MPC on the sort of MPC algorithm level, so that at least there's a lot of eyes on the same sort of algorithm, and whenever there is research that sort of identifies a vulnerability. You know, like the academic and research community is also paying attention to whatever is like best in class tech on the more like the research side, right? So seems like a combination of both of that actually starts to be a bit more robust than sort of traditional centralized systems.
Can I add one more thing?
Yeah.
The
Yes.
other thing that I think this leads to is the threat model. As we go through this process of peer review, open sourcing the MPC algorithms, and it's getting deployed and used, we're learning more about or we're validating the threat model in some instances and learning more about the adversary and the capabilities they have to compromise an MPC system, and that's adjusting the types of zero knowledge proofs that are getting added to the protocols to make them better, and not only for correctness but also to be able to catch malicious behavior. That's the part over the last couple of years that's gotten a lot more attention, and has led to more, as bad as the headlines might seem, it's actually making MPC more robust for real world deployments, and we're learning about how to put the right best practices in place to deal with certain events that could happen.
Yeah, that's why I'm very interested to go to the ZCon conference,
Right.
which is a Zcash community conference every year. I want to find out where that is, because I think the academic institution, everybody got to come up with some standards of practice and also solutions, so that when you do, when you build any infrastructure and to ensure that there's not centralized, there must be certain checklists and so on, and that is not out yet. And this is why there's so many different opinions out there. We need to achieve the kind of at least some basic standards, professional practice for at least in the field of designing some of the design thinking and so on. So the other thing as academic institution, in order to work with the community, is to understand the risks of MPC computing. What really are the risks of using all this MPC computing?
Yeah, so the easy one is when you create an MPC wallet, before this wasn't a standard, but this notion of recovery. Now with most MPC providers, they have you go through a recovery process to make sure you can reconstruct your wallet before you sign any transaction. And that's because, this happened because of Fireblocks. One of their customers didn't follow the steps for recovery correctly when they onboarded, and they didn't validate it. And so a situation happened where they lost access to their wallet and needed to go through recovery, and they couldn't, and therefore lost a significant amount of money because they failed to check that they did recovery correctly when they generated the wallet, the MPC wallet. And so now, most of MPC wallet force you to go through that process and validate it before you sign any transaction, which I think is great for the industry. But it came as a result of very painful,
very expensive lessons, right? Because every time you are dealing with crypto, you are dealing with new innovation, every mistake you make is actually very expensive. But
and because it's irreversible, right? When funds are gone, it's gone. You can't change the block.
That's why it's important for you to come here and conduct 1.5 days for us to understand why it's so important to really understand the entire technology and how people do it, but at the same time, there's no foolproof way. We have to learn by mistake. I think that's something that we need to know, that in this field, we learn by mistakes, and hopefully someone don't just capture the headline and say that this whole Web3 is a joke, right? That's not the way to do things. We are all here to learn, understand, and then to improve the system. Shawn, what do you think are risks of the MPC wallet?
I think the one question is sort of what we already spoke about, which is how do you sort of ensure that the software provider, the vendor providing the MPC solution to institutions is safe, right? As safe as it can be. I think one of the questions is always risk, not from a compromising digital assets perspective, but how do you get people to understand this very complicated field of cryptography, and then maybe from a regulatory perspective, how do you and sort of compliance perspective, right? How do you then communicate and educate the people who would be responsible for deploying the technology, and maybe the people regulating the regulated institutions that would deploy this technology, so that they can understand what what it does, what does it mean, like where the risks are, and so properly focus on where the real risks are, as opposed to like not being able to understand that, I think sometimes you see that like technology advances and there are better ways of doing things, but if regulations are not well designed, you end up sort of forcing people into older systems, right? And so I think that, for me, from an adoption perspective, is a risk, right? How do you ensure that people, I guess, events like this are great, right? In sort of explaining the more technical, like, you don't need to have a PhD in cryptography to start to understand conceptually how the technology should work and how you can apply it to your business.
Thank you, Shawn. So last question is that being academic institutions, being the node for inclusive fintech, we're always interested in research and looking at the future trend and areas. So what next for MPC in terms of research? We have PhD in cryptography here, but we don't look at things from just purely the computer science. We look at the impact on society, impact on business, how business model changes. We harness the technology to try to do good and mitigate the bad side, the harm of it. So the key question to both of you to end today's session is that what's the future of this MPC? What are the future area of research, and what do you see next for MPC?
Yeah, that's a great question. I'm going to answer in two ways. So personally, what I want to see, and then what I think will likely happen, and the difference between the two. So what I'd like to see is, sort of MPC spreading in terms of the use cases beyond crypto. And that's because when you look at health, look at, even just a basic password manager could benefit from.
All industry.
All industries.
Yeah.
Right?
Anything online should
Anything
MPC.
that's digitized can benefit from an MPC system. It just depends on who the parties are that need to be involved and what kind of policies make sense, and making that more accessible and usable. So that's what I would like to see. But what I think will likely happen is that we're going to end up having to make MPC more robust for real world use at a very massive scale with decentralization as kind of the focus before we see more applications, right? Obviously, the financial application will drive this investment, but I think I'm okay with it, I guess is what I'm saying. Just because I think the end result is making MPC as robust as possible for the right use cases, so that we can, checkpoint there, make it a standard, get regulators to understand it, so that we can then move on to the next level in expanding.
Right. So from the adoption side of research, it has to have the right UI, UX, and also the right type of regulation. So that's one area that I think NIF can look into, how to actually incorporate into regulation or trade agreement, cross-border remittances, cross-border trades where it involves digital assets, and then use an MPC wallet, which is a lot safer. How that should be incorporated in some of this digital agreement for cross-border. I think that's something that I think NIF will probably look into. Shawn, how do you look at the future of MPC?
I think one of the interesting applications of MPC, or like the next level as it relates to digital assets and sort of crypto networks generally, is to start building in programmability at the MPC network layer, right? And so I think the interesting things those types of applications will unlock is like a lot more like cross-chain stuff without needing bridges, right? So your bridge is at the wallet signature level, and you can grant permissions at that MPC network level. I think, again, I'm not a cryptographer, but I'd be interested to know what you think actually are the what kind of like advances have to be made on the research end, like for that to be efficient enough to be run. I don't know.
So that's a good question. Atomic swaps are a basic building block that we can build on to move value across chains trustlessly, which gets us closer to what you're describing. The challenge has always been sort of the security associated with some of the, you're only as good as your weakest link.
There's no standards.
There's no standards. And so, until we have true decentralization across all of the blockchains that people want to use, it's going to be difficult to move it out of, to get it to that level where it's just at the signature, at the wallet level, we're just signing, things, and you can trust that it's actually like, no rollback attacks on the weakest link of.
Yeah, so there's a lot of scope of collaboration between cross-chain wallets,
Right.
MPC wallets. I think those are one of the areas. But okay, I think we have discussed quite a lot today, and I'm sure all of us has got a much better understanding of how trust and responsibility can be distributed, and why financial institutions who are not in Web3, but in anyone who's dealing with digital assets on whether centralized server or the more for those who are on to distributed ledger should pay attention to. And we have heard a lot of use cases here, and a very strong argument of why, if you are serious about the digital economy, we cannot ignore the technology from Web3. I think that's the key thing. A lot of people hear about Web3, they just disappeared because they just say the Web3 is not the area. But even now in China, you can see that Hong Kong become a very important node for Web3 for precisely the same reason that nobody can ignore the technology in Web3, despite what you hear in the news or in LinkedIn. But there should be a lot more discussion like what we have here, looking at the potential, but not only at the potential, but the risks of some of this new technology and how that can be incorporated in our daily lives. Such a technology is something that we don't have to know exactly what MPC is. We don't even have to know what is distributed ledger, but we just use it with comfort, with ease, and with the peace of mind that our digital assets are safe. And underlying that is that this responsibility and of course legal liability are spread across responsible parties. I think that's the key message that from this discussion. So with that, I would like to thank today's panel member, Dr. Ayo, all the way from Maryland. And I also like to thank Shawn from Artichoke Capital. And also thank all of you for spending 1.5 days here with this final panel. I hope you enjoy this 1.5 days. And there will be more events organized by NIF. So thank you very much and have a good lunch. Okay, and thank you. Thank you very much. Thank you.
Thank you, Professor David.
Thanks, Shawn. Thanks so much.
Thanks, Shawn.